Good morning, everyone, and welcome to the Ankerstar Wealth Market Update. I'm your host, Allison Ankerstar, and today we'll be talking about today's inflation number, Dell's earnings, and the move up in DXC yesterday. But before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. The Fed came out this morning with an inflation number of 4.9% for April. Is this confirmation that peak inflation is past?
Well, good morning, Allison. I think that's going to be the question that the markets are going to wrestle with today is, I'm looking for the banner here. We can get the article right here. If inflation is starting to break, then that's going to be a significant boost in the market. Obviously, yesterday we went up, between 2 and 3% across the board. You can see the Dow futures are pretty strong this morning too. The futures, not just the Dow, but all of them across the board. And Dow on pace to snap an 8-week losing streak. Knock on wood, but wouldn't that be nice, right? Because all we've done is sell for the past 2 months. So it would really be nice. So what's driving it again is a huge jump this morning based off of this number. The Fed's preferred gauge shows inflation rising 4.9%, which in itself is a bad number, but you get down into the expectation and it was 5.2 back in March. So anytime you get these numbers that show a decrease over time, that gives at least some confirmation to the thesis that the actions that the Fed is taking are working, right? Or it's just breaking anyway. Who cares who gets credit, right? We need inflation to kind of break for the markets to be able to turn around and go higher. So, we shall see. This number does exclude like food and energy. Does that seem like, things that have inflated? Yes, it does. So maybe it's leaving out two of the bigger, components there of that inflation number. But really, when you look at, especially the NASDAQ, we'll pull up the 1-year chart here. There it is. So still, bouncing off of that bottom, if you will. But it'd be nice to see us march back above that 13,000 level, just kind of stabilize a little bit higher than we are now. So hopefully these inflation numbers that come in continue to be good.
Next, Dell beat earnings this morning. Is Dell a buy, sell, or hold here?
Dell's here local, and it's always tough to invest locally because you can be biased, right? I know several people that work there. I have several clients that work there. And, I hear them just talking about all the great stuff they're doing, like everybody, who believes in the company they work for. So it's tough it's a little too close to home. So I'm generally not a buyer of Dell just because of that. And I do inherit a lot of it in the book with some of the folks that I work with who have, stock options, that sort of thing, or profit sharing stuff. So it ends up there anyway. But really looking at the numbers, it's pretty impressive. So even after the move, you're looking at a 3% dividend yield, which is, pretty impressive for a tech firm, right? You generally get nothing or even just a fraction. And you look at the PE ratio of a 7, forward PE of a 6. So earnings are increasing. It's just a lot to like here. Gross margin, 19%. Dell during COVID obviously did very well. It was almost a resurgence because everybody's working from home. Not everybody, but a lot of people working from home. A lot of people were upgrading their equipment, and of course, Dell has all these huge contracts with folks out there, big companies. So a lot really to like here about Dell. I'm not going to give it a clear buy until I look at it a little more than I just did this morning, but pretty favorably priced after it dropped, 35%. Recently. So, pretty big move down. It has resurged back up, but overall it's still pretty cheap. So I'm going to take a harder look at it today.
Last, consulting firm DXC beat earnings this week and the stock soared. Is it time to get into DXC?
Well, DXC, starting to hear of them more and more, and a little bit of the backstory. They did spin off from Accenture, which is the old Arthur Andersen back in the day. And anytime you see a split off like this, you really have to kind of look and say, okay, obviously a group of folks just up and left and started their own thing. So you need to kind of let it go for a little bit to see if this is a good thing or a bad thing. But overall, I think you can easily say for DXC, it's a good thing. I'll go to the 5-year chart, even though there's not 5 years worth of data, but well, maybe there is. Going back to 2018, you see it drop all the way back down in here, down to 15. So the 5 years probably a little too much. But really, when you look at the 1 year, the stock has been beat up like everything else, but this move up here to 34 yesterday was a 16% climb. I do have it in the book. I was a buyer around 30, not most recently, but actually back in here. I've held this stock for a while. So my 30 was back in here, had a huge move up and then come settle all the way back down to 27.50 or so. But really, when you look at this 27.28, that's the 52-week low. So really, when you look at this, you're like, okay, you're getting a consulting firm for a current PE of 12. Things are getting better. So the forward PE is 9. And you think consulting firms, normally you're thinking up in the 30s as far as PE ratio. If you pull up the parent here, or the former parent, I should say, because it's clearly not the current parent. But if you pull up Accenture, which is arguably one of the best in the world, you're going to get kind of a similar story from the stock picture, right? It's been crushed, from 400 down to 275 here in 2022. But when you look at the PE ratio, you're looking at a 30. So you're looking 2.5 times if you wanted to buy Accenture, what DXC costs. So overall, I like DXC. I think it's a buy here. You can hop right on in. I'll pull that chart back up. This is one of these you wish you had after it jumps. You wish you had it back at 30. But yeah, I still think you can buy it here. It's got plenty of room to the upside and a nice cheap price earnings ratio going forward.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here Monday.